What's going on, guys? Welcome back to another video. So in this section we're going to talk about market moving events. It's very important for you to understand these things, and this is the last section that we're going to talk about all these stuff that are kind of related to day trading but not really day trading, because I want you to understand exactly how the market works before you make your first ever trade. All right, that's very important. So in this section we're going to talk about market moving events. In this video, I want to talk about job reports. Now, job reports are essentially pretty much one of the most important events of the market. The reason for this is that job reports pretty much indicate how an economy is doing, and when you actually understand it correctly, it can really give you an understanding of how this certain security that you're investing could perform, especially if you're trading ETFs. But even if you're trading stocks, like day trading stocks, it still affects you. It still can actually move your stock. Like, there's no company that a job report does not affect in stock market. Okay, because a job report, whether it's being good or bad, it actually really affects the entirety of the economy and entirety of the market. So it really isn't particularly related to a certain company. So that's why it moves pretty much everything. So it's really something that you want to be careful and you want to remember that. So for you to actually get information on job reports, you can either go to bls.gov or you can go to the economic calendar that I just shared with you in the past, in the previous section. Remember, for example, today is one of those days where, we got the job reports, unemployment rate coming out. But yeah, so if you actually go to bls.gov as well, you're going to be able to see that. And you can see the first thing that shoots out is this. You can see all the you can see the report, and if you want, you can actually save the job report itself. So you can actually click on this and you can save this URL, and essentially you can refresh this because they just change it. So you can refresh this every time a new job report comes out and you can see it immediately. So as you see, again, this is for today, and as you see, they say that their jobs, actually the unemployment rate actually went down to 3.5%. So since we're in a bear market, this means that this is not a good thing. So in the ideal world, this would be a good thing, right? Because unemployment goes down, that's a good thing for the economy, all that, yes. But because right now the Fed is increasing the interest rates constantly, you want unemployment to go up. Because if it does, that means that the market is going to say, okay, the Fed is not going to move the interest rates up anymore, or at least maybe slow down with that, and then the market's going to feel good about it, and the market's going to go up. But right now, because we're in a bear market, you want unemployment to go down, but this time it didn't. You see, it edged down to 3.5%. So it's not good, because again, this was 3.7% previously. So that means that the unemployment rate went down. This usually means that the Fed has to take a more hawkish action to tame the economy. So that's very important. That's why this is a big deal. So again, unemployment, a really huge deal. You definitely want to keep an eye on this. You can really favorite this. I see I already have it favored. I already have it saved up here, and I can just click on it and see it for myself. So definitely something to remember, and something that is definitely going to affect the way you trade and the way market moves. So I just want to share that with you guys. We're going to talk about some other types of reports, and we'll move on to the next section. So in this next one, I want to talk about earning reports. And yeah, so I'll see you in the next one, guys.